Hello and welcome to Philippine Real Estate Insights. In today's video, we're diving into a topic that many of you have been asking for: how to start investing in real estate in the Philippines. Whether you're a first-time investor or looking to expand your portfolio, this step-by-step guide will help you navigate the process with confidence. Make sure to watch until the end for some pro tips that can make all the difference in your real estate journey. Step 1. Define your investment goals. The first step in any investment journey is to define your goals. Ask yourself why you want to invest in real estate. Is it for long-term capital appreciation, generating passive income, or perhaps diversifying your investment portfolio? Your goals will shape your investment strategy, the type of properties you should focus on, and your financial planning. For example, if you're aiming for passive income, rental properties might be your best bet. If it's capital appreciation, then pre-selling properties in rapidly developing areas could be ideal. Step 2. Determine your budget. Next, it's crucial to establish your budget. This includes not just the purchase price, but also other costs like taxes, legal fees, and maintenance. Understanding your financial capacity will help narrow down your options. You can finance your investment through personal savings, a bank loan, or even through real estate investment trusts, REITs. Consult with a financial advisor or use online mortgage calculators to determine how much you can afford and the ideal financing plan for you. Step 3. Research the market. Now that you know your goals and budget, it's time to research the market. Focus on locations that have a high potential for growth, such as Metro Manila, Cebu, or Davao. Look at factors like infrastructure developments, proximity to business districts, schools, and hospitals. The more research you do, the better your chances of making an informed investment. Attend real estate seminars, join forums, and follow industry news to keep yourself updated on market trends. Step 4. Choose the right property type. There are different types of properties you can invest in: condominiums, townhouses, commercial spaces, or even raw land. Condominiums are popular for their amenities and security, making them easier to rent out. Townhouses offer more space and are ideal for families, while commercial properties can provide higher returns but often come with higher risks. Your choice should align with your investment goals and target market. Step 5. Work with professionals. Real estate investing involves a lot of legalities and paperwork. To navigate this smoothly, it's wise to work with professionals, like real estate agents, brokers, and legal advisors. They can provide you with expert advice, assist in negotiations, and ensure all legal requirements are met. Choose professionals who are experienced and have a good reputation to avoid pitfalls. Step 6. Conduct due diligence. Before finalizing any property purchase, conduct thorough due diligence. This includes verifying the title of the property, checking for any encumbrances, and ensuring that all permits and licenses are in order. For pre-selling properties, check the developer's track record to ensure project completion. This step is crucial to avoid legal and financial issues in the future. Step 7. Close the deal and manage your property. Once you've completed all the necessary checks, it's time to close the deal. Make sure you understand the terms of the contract, the payment schedule, and any other conditions. After acquiring the property, the next step is property management. If you plan to rent it out, you can either manage it yourself or hire a property management company. Good property management can maximize your returns and keep your tenants satisfied. Pro tips for new investors. Start small. Consider starting with a small property, like a studio unit, and gradually scale up as you gain experience. Network. Join real estate groups and forums to learn from other investors and stay updated with market trends. Patience is key. Real estate is a long-term investment. Don't expect immediate returns. Focus on building your portfolio over time. And that's it for today's video. We've covered everything you need to know to start your real estate investment journey in the Philippines. Remember, success in real estate doesn't happen overnight. It requires research, planning, and patience. If you found this video helpful, don't forget to like, share, and subscribe to Philippine Real Estate Insights. Hit the bell icon to get notified on our latest updates. See you in the next video, and happy investing.